Shares of Transocean, the company that owned the sunken rig, not the well, but the rig, have plunged 20% since the accident. And yesterday, Transocean reported its fifth straight quarterly earnings decline. For more on Transocean, BP, and the oil spill, we're joined right now by Argus research analyst Philip Weiss. Bloomberg data shows Philip is one of the most accurate forecasters of Transocean, making him a Bloomberg best. Philip, always good to have you here. Let's talk about what we've learned in the past couple of days. Clearly, Transocean's results aren't affected by the spill because it happened after the end of the quarter. But there was some additional disclosure to the SEC yesterday. What did you learn from that?
A few things. First, from a business perspective, this is going to cost them about $590 million of revenue because the contract's terminated because the rig is a total loss. Second of all, they had some disclosures in there about their potential liability, and Transocean indicated that they believe that insurance would cover them up to about $1 billion. We know that the rig was valued at about $560 million, and so far Transocean has received a payment for $401 million. We also know that as far as the spill itself goes, there's kind of two places that the government is targeting, and that's oil at the surface from when the rig caught fire, and then also at the wellhead. And according to the 10Q, the government is investigating Transocean for responsibility for the leaking oil at the ocean floor, as well as what happened up above the surface. And Transocean has denied that they have responsibility for the leaking water at the well.
Just to be clear to everybody, you're referencing the 10Q, which is the quarterly filing to the SEC. Now, that sounds like some news because we've heard the president himself say that the government is going to go after BP. Based on what you just said, it sounds as though Transocean expects the government to come after them as well.
That's correct.
Now let's talk about what all of this means to Transocean, BP, and everybody else's efforts to drill in the Gulf. I know you've been giving some thought to this. How do you think it might play out over the next several weeks and months?
Well, we can't know everything yet because we still haven't found what caused this accident, but I do expect that at a minimum there's going to be more strict regulation, which is going to increase the cost of doing business. And some things that Transocean pointed out in the 10Q that are possible risks are the negative publicity and negative perception on the part of both customers as well as potential personnel to work on these rigs, higher insurance costs, and then they also mentioned the possibility of increased regulation and higher drilling costs.
Philip, very briefly, with about 20 seconds to go, talk to me about some of the companies you think are most at risk because of those factors looking forward.
Well, certainly Transocean and BP have to head that list, but some of the other companies that could potentially be impacted would be companies that are heavily involved in the Gulf, and that would be on the exploration side. Some of the large integrators like Chevron, potentially, if they did put costs on their project, or peers of Transocean like Noble or Diamond Offshore.
Philip, great insights as always. That's Philip Weiss, folks. He is a Bloomberg best, talking to us about Transocean and BP.